It does make sense to have a higher cost for physical silver, especially for a single ounce, than for the spot price. But the spot price absolutely has to rise, and I think it will rise. You're going to get a point when people lose faith in fiat currencies, and they're going to flock to precious metals.
Peter Krauth discusses the fear and worries people have due to inflation being a big driving factor. He emphasizes that inflation will be the defining feature of the investment landscape for the next decade.
People are afraid. People are worried because they've seen inflation. Inflation is a big driving factor. Obviously, I've been saying for a while that inflation is going to be the defining feature of the investment landscape for the next decade easily. So you'd think, okay, metals should do well during inflation. Central banks are trapped. We are at huge debt levels in the 1970s, which is the closest sort of analog to what we're facing right now. A full decade of really high rising inflation. And during that time period, believe it or not, debt to GDP actually fell. By the time we reached 1980, the debt to GDP level was 30%. Today, we're at 130%. So it's very simple. If you look at what's going on, you say, what ended inflation in the 1970s? The Fed chair, Volcker, was able to raise rates, had the guts and the ability. I'm going to say that's important to consider. He had the ability to raise rates to 20% for a little while. That sounds crazy to some people today. I know that. But the reason he had the ability was because the debt to GDP level was so low. Debts relative to economic output were relatively low. Today, we're at more than 4 times the debt to GDP level that we had in the 1970s.
Peter Krauth discusses the limitations that central banks face in raising rates due to the huge levels of debt in the government, consumer, car, student, and mortgage sectors. He also suggests that central banks can only go so far before they start crushing everyone, and that they might have to start printing money just to pay off the interest on the debt.
So for me, it's very clear. Central banks will talk tough. They will raise rates somewhat. I don't think they're going to be raising them much farther. And then they're going to have to stop, and we're going to have a recession. And then they're going to start backing off and decreasing rates. They know debts are huge. If they increase rates too much, that makes paying the interest on these debts. I'm talking government debt, consumer debt, car loans, student debt, mortgages, you name it. It's all at practically record levels across the board. The Fed knows this. How much could it possibly raise rates without absolutely crushing everyone? The government itself, I believe, at some point is going to have to start printing money just to pay the interest on its debt. So the Fed's hands are tied. Central banks' hands are tied. They can only go so far. They're going to talk tough, make people think that they're going to raise rates to keep things under control, but they can't. And in fact, it actually suits them to allow inflation to run hot, because it makes debts easier to pay over time, because the money's worth increasingly less. There's really nothing realistically that they can do. The Fed knows it themselves. They're not going to admit it. But like I said, they're going to talk tough, because that's really all they can do, is try and manage expectations.
Peter Krauth discusses the potential for precious metals to perform well during inflation and recession, and how silver's demand is underrated. He also predicts that the firing shot for the next big up leg in precious metals will be when all bets are off with inflation and the Fed starts cutting rates.
When it really comes down to that, they can really only, in a practical sense, really only do so much, raise rates so much without really crushing everything and everyone. But if you look at where gold and where silver are, going back to 2000, gold was at $250, 2001, silver was at $4. So, silver went to $50 twice since 2000. Gold's been to 2000 twice since 2000. So look, silver, what's going to kick it higher is when you see that all bets are off with inflation, when the Fed basically caves and the Fed blinks, stops increasing rates because it sees it really can't anymore because a recession has kicked in, and actually starts to cool rates or pull back on rates, decreasing and cutting them. I think that's going to be your firing pistol, your firing shot for the next big up leg in precious metals. If you look at how silver acts, silver is very volatile. It's very much a sentiment-based asset. People buy precious metals when there's fear. And I think that the investment demand for silver is underrated in terms of what it can do.
Peter Krauth discusses how silver plays a crucial role in a green economy and green energy. He explains that silver is used in various industries such as electronics, electrical uses, EVs, medical equipment, and especially solar energy.
Look, silver is 50%, a little more than 50% industrial metal. So that means that it goes into electronics, it goes into electrical uses, it goes into EVs, it goes into medical, all sorts of medical uses. And its single biggest use is solar. I think that even if we do see a slowdown, there's so much support for this shift to a green economy and green energy. And especially with solar, there's some countries where solar is the cheapest new way to add power to your electrical grid. Solar just gets cheaper. Solar consumes 11% of the annual supply of silver. And I just think there's so much support for this shift towards green energy.
Peter Krauth argues that the support for green energy will create a floor under the silver price. He predicts that there will come a point where people lose faith in fiat currencies and will turn to precious metals. He also believes that this shift towards precious metals is inevitable and that people should have some exposure to it.
The support is going to create a floor under the silver price. It does make sense to have a higher cost for physical silver, especially for a single ounce, than for the spot price. But the spot price absolutely has to rise, and I think it will rise. You're going to get a point when people lose faith in fiat currencies, and they're going to flock to precious metals. When you have that, it's just going to be completely overwhelmed. People think that they can't get inventory now, that they can't get supply now. We haven't seen it. Think that it's going to just go absolutely wild, and the premiums are just going to go even that much higher. People should, I think, buy at least a little physical. It's an area you want to have some exposure to. You don't want to be caught without at least a little bit of physical. It's proven itself over hundreds and thousands of years, in fact, and I believe we're going back towards that. Gold is the anti-dollar. Gold and silver are the anti-dollar. And so we're certainly evolving, if you want to use that word. Maybe I'm too generous, but we're working towards a future where precious metals will have some form of backing currency once again, whether it's overt or not. You could just have something like a big announcement by the Bank of China saying that our last official declaration on how much gold we have was, say, 1,500 tons. Today, it's 5,000 tons, something along those lines. And I am convinced that they're aiming to reach what the U.S. says it has officially, which is about 8,000 tons. And that'll put them on par with the U.S. Their economy is a couple of years maybe from matching the size of the U.S. economy. And so they play the long game. An overnight announcement like that, I think, is going to be a huge game changer.
Peter Krauth emphasizes the importance of being forward-looking and preparing for the future. He advises people not to assume that the past will dictate the future and to look at non-mainstream information sources to make informed decisions.
People just should not sit back and be lax about it. They have to be careful of, what is definitely called recency bias. Don't assume that what you've experienced and lived up until the last recent past is the way things are going to play out going forward. Be forward-looking. Look at non-mainstream information sources. Make up your own mind about what's logical, but look at the arguments and see what makes sense. And history does not necessarily repeat, but it often rhymes. If you look at what happened in the 70s, I think that's a great indication for where we're headed. I think it's just going to be on another level. So people really need to look at what may be coming, prepare for it accordingly.